The S&P 500. This is what we're going to start with because it's a lot of institutional ownership's benchmark for their progression. It's also something I like to use as my benchmark as well. If I can't beat it, then you might as well join it. They usually earn between 8 and 11% on your money each year, at least on average, dating back for over 100 years now. Looking at the S&P 500, we can see last week it reached up and grabbed a new all-time high of 424.61. Old Papa Powell came out and stayed the Fed interest rate hike at 5.5, dumping a bunch of money into the market. Well, the S&P 500 stays up here. It is again once extended from its 10-day moving average, so we would like to back off, wait, maybe take some profits on some of your early investments, and wait for this to come back and reform another wedge or trend line, as I like to call them, on the 10 or 21-day moving average. As long as it can hold those, the bears will have to stay their tongue. I think we are still on another beautiful bull run. Next up will be the QQQs, the tech-heavy QQQs. Some of the holdings in the QQQs are Microsoft, Apple, Nvidia, Amazon, Meta, Broadcom, Tesla, Costco, Google, and AMD. The QQQs are still above a rising 10 and 21-day moving average. Still looking very, very well, but have to contest with their all-time highs at 449.34. Do you think next week it can reach up and clear past those, or do we still have some major pullbacks to do? It looks like we have support on the 30-day moving average. Let's see if we're going to sustain a bid and buying power at this area and continue higher, or if we need to trade sideways and let those moving averages catch up. Next up, you have your IWM. It's reached up there and grabbed a price of 210.30 cents. It's absolutely beautiful. It's the all-time high for this year since the start of 2023, and it has been the all-time high since 2022. So this is a new benchmark to try and beat. The IWMs is a small and mid-cap holdings. Some of your top holders are MSTR and SMCI, ELF, the beauty brand, and there's many, many more. These are very speculatory stocks, and if you can catch a bid on some of these, they are some of the fastest movers. This ETF shows a beautiful benchmark that if the breadth in the market is to continue, while the QQQs may have a pullback or the S&P 500, we would want to see some of the money being channeled into the IWM stocks. So, with the IWM reaching up and grabbing a new all-time high for the past 2 years, that is a beautiful sign for the overall market. Next up is the NDX, or the NASDAQ 100 Index. The NASDAQ 100 holds 100 of your bigger stocks in the US. Take a look at some of these NASDAQ 100 names like Microsoft. It's down by 0.5% to begin the day's trading session, but there is a lot of good news like Apple trying to rebound off of those lows. Still below a 200-day moving average, I would be very careful. But you're still holding up by Google. You're still being held up by Nvidia. And you can see that these stocks holding up the NASDAQ is keeping it at around 18,254. It still has some work to do to reach up and grab the high of 18,464. We will see if it can do that next week, but still above a rising 10 and 21-day moving average. This is beautiful for the overall market. Next up will be your SMH, or your semiconductor ETF. Your semiconductor ETF has growing optimism about the prospects of Fed interest rate cut hike. You can see it's still above the 10 and 21-day moving averages. It still has to try and reach up and beat its all-time highs of 239.14, currently trading at 224.99. But remember, the SMH is what started this rally. It might be one of the first to pull back. It still has some room to pull back, with the 30-day moving average being its strongest moving average for support. Next up is your equally weighted. Now, we look at the equally weighted for a multitude of reasons. The equally weighted will show that even though we have a high interest in technology or a high interest in anything else, you can't blame the market being only held up on one certain area. If consumer staples and technologies are the only thing that are keeping this market up, well, then we would want to look at the RSP, or the equally traded S&P 500, to see if the weight is being held evenly. And currently at an all-time high of 169.80, we have no reason to hear any argument from the from the bears, that this is anywhere near coming down. We need to at least break a 10 and 21 day moving average that has been its support for the past year, almost 2 years, really, about a year and a half since the October lows actually of last year is when the bull run started, holding those ETFs very firmly. In some RSP news, or equally weighted news, there are a handful of stocks that have been driving the market indexes that can be exhilarating. There's also time to be tapping the brakes, whether to reduce risk or diversify a portfolio, this section says. The fact that the equally weighted has been running evenly with market capitalization, weighted S&P 500 ETF, or the SPY, as we talked about this first passage. Over the past 30 days, it has drawn attention to both savvy market watchers and trigger-happy traders as a sign that the influence of the Magnificent Seven stocks is weighing slightly. Meaning this stock, this ETF here, might be something safer to go into since it's equally weighted, and you don't have to worry about your ETFs like the SMH or the QQQs failing miserably. Next up is your big boat, your grandfather's stock, your Dow Jones Industrial. This Dow Jones Industrial reached back up again. Absolutely beautiful. Beautiful to see this. Your Dow Jones Industrial reached back up and almost pressed into all-time highs again already this week. We talked about this last week, about the highs of 39,889 reaching up there and grabbing that price well above the 10-day moving average. We warned about a pullback in the overall market, and Dow Jones Industrial was one of those. It pulled back and just actually stayed just above that 10-day moving average, breaking back higher again, almost reaching out and making a new high again this week. Now trading at 39,807. This big boat, your grandfather's ETF, is very nice to see up here. But remember, if you're looking at getting into some of these, you need to be careful at these highs. I always like to say, when we are above a 10-day moving average and you are trying to get into United Health Group, Microsoft, Goldman Sachs, Home Depot, Caterpillar, Salesforce, McDonald's, Visa, Amgen, Travelers, American Express, or Boeing, let's take a look at the Dow Jones Industrial, and if it's extended, let's wait for a pullback and then take a bid on one of your larger stocks. Next up, guys, it's the dollar. So your dollar's just been trading sideways for the past few years. Since 2022, the lows, or I should say the beginning of 2022's, the lows were down here at 100. We have been bouncing back and forth between 100 and 107, and that's a beautiful thing to see when you have sticky inflation. Now, if we went straight down or straight up would show that inflation is still sticking around and we have a lot more to fight. Trading sideways is showing that it is relatively evening out. Now, the US dollar initially soared to 104, but then stabilized at 104.50 on a positive side. GDP, or gross domestic product, revision strong weekly initial jobless claims from figures from the U.S. benefit from greenback. But a weaker than expected Chicago PMI seems to have brought the USD's momentum down. So the U.S. economy appears steadily with the Federal Reserve stance, trading a cautious path despite upward revisions of inflation projections. Now, as we all know, with the 3 Fed rate hike cuts coming by the end of the year, at least that is the most latest news, we can expect the dollar to start lowering. Next up, I told you I would talk to you about Bitcoin, and here it is, ladies and gentlemen, not too far from those all-time highs of 74,415. It's always nice to look at Bitcoin. Simply put, when you look at Bitcoin, you can see that we have other things we can look at too, like the Bitcoin miners. So if you're getting into Bitcoin, the best way into Bitcoin is to buy Bitcoin. But if you're trying to not buy Bitcoin and stay in an equity or something that has to do with Bitcoin, you can look at Mara, Riot, or CLSK. There's many ways to get into Bitcoin without buying Bitcoin, but I suggest if you do buy Bitcoin, you buy it and you store it on your own. Next up, we're going to go ahead and talk about gold. So I talked about gold breaking out here of these all-time highs of 2091. So 2091 was the benchmark for the gold futures, and it broke out above that. We talked about a pullback into this 10-day moving average. We got that. We pointed out a few stocks that you could have looked at, like HWI, Harmony, and that was a beautiful stock to be in, especially on this rally. Now, gold is expected to continue higher, but I always warn people at these highs, you need to be careful, wait for a pullback. It is imminent, and then catch a bid off of one of these downtrends and wait for a 10 and 21-day moving average to catch up. Last but not least, we have your volatility index. Now, I've seen a lot of articles out there that shed a lot of fear when the VIX volatility stays under a 20-point area. So when the volatility index gets below 20, people start having fear because they're worried it's going to skyrocket back up to the 30s or the 40s. Okay, now what I have to say is there was a little article, maybe I can pull this up for you, but the little article just explains that the last time we were in an area of these lows, we have had it stretch between 2012 and 2015. And it can stay low like that for years on end and just bounce around between that $20 and that $13 area. So keep in mind, no matter what you're reading, guys, all we have to do is keep an eye on it. If it looks like it's going to continue higher or start to spike, but do not predict. We react to these price actions and we react to the overall market. So it's good to have the VIX volatility or the CBOE market volatility index on your watch list so you can keep an eye on where it's at. But do remember that we aren't trying to predict what's going to happen. We are just here to react to what's happening. And currently, with overall everything going on, the VIX at an all-time low, the dollar trading sideways, the S&P 500 at an all-time new high, the equally weighted at an all-time new high, the QQQs trailing a 10 and 21-day moving average. I like to say that we are on a beautiful bull run, and there's nothing to worry about until we break some of those moving averages. I'm Dave. Thank you so much for joining me. I hope you loved what you watched, and if I brought you any entertainment whatsoever, please hit that like and that subscribe. It helps us out tremendously.